Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Bulls regain control. So after a 5% slide in the first half of August, the bulls have regained control of the stock market over the past week and a half or so. The S&P 500 index is up more than 3% from its August low point and is now back to within a stone's throw of its 2023 highs that it reached back at the end of July. Now, this is after two big events last week, which kind of confused investors as to which direction stocks might head from here. The first big event was another blowout earnings report from the AI chip maker, NVIDIA. The company beat its earnings expectations by a country mile and then proceeded to raise its earnings guidance for the future as well. Now, after the news release, the stock rose nearly 10% in after-hours trading, only to close unchanged during the next day's trading session before actually declining the following day. Now, that selling pressure didn't last long, however, as the stock is now actually back near its all-time high around $500 per share. The other big event last week was Fed Chairman Jerome Powell's speech at the annual Jackson Hole Conference hosted by the Kansas City Fed. Markets initially traded down on that speech, thinking it was relatively hawkish, meaning the Fed will keep monetary policy tight with higher interest rates. But by that same afternoon, the markets were actually rallying, and they haven't looked back since. For this week's featured insight, Inflation Explained. Well, there have been numerous reports over the past few months that the rate of inflation has slowed significantly and is even approaching historically acceptable levels in the 2 to 3% range. So if we've made so much progress on inflation and possibly even conquered the inflation beast, then why are prices still so high while many consumers are struggling to make ends meet? Well, the answer to that is that the inflation rate is a rate of change of prices, not the underlying prices themselves. Meaning that a lower rate of inflation only means that prices are rising at a lesser rate, not that prices are actually falling. The Fed has a 2% inflation target, which sounds relatively modest, but the double-digit price increases we've experienced during the past couple of years aren't going to be unwound. Unfortunately, it will still take time to get used to this new higher price level, even if prices aren't rising quite as fast as they were last year. Looking ahead, September volatility. Well, despite the stock market rally during the past week or so, major stock market averages are actually still down for the month of August. Now, I warned of this possibility toward the end of July, highlighting that August does tend to be one of the weaker months historically. I also mentioned at that time that September has tended to be a weaker month on average as well. For that reason, in addition to signs of economic data slowing in recent weeks, it likely makes sense to pare back on some equity exposure in accounts that are currently overweight relative to their targets. Likewise, if you're looking to put new money to work, it may make sense to use potential volatility going forward to dollar cost average into the market over the next few months, rather than going all in right now with the market still trading near 52-week highs. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.